The Rebel Capitalist Show.
You and I have spoken about the 401k, we'll call it issue, and so many of my viewers and commenters always say, listen, George, I've got we'll call it a normal kind of 9 to 5 gig, and my employer matches what I put into the 401k to a certain percentage or a certain dollar amount. And it's just kind of a no-brainer. I have to put money into this 401k because there's such a high dollar amount as far as that employer match. But by putting it into this 401k, I'm very limited by what I can actually invest in. And I've heard some people say that sometimes they're only given like 4 or 5 choices, as it's like this index fund, that index fund, or this one. And it's just A, B, or C, take your pick. And they come to me and say, well, if you're very very bearish on the economy, and all of these funds are tied to the economy, it's kind of like this cost benefit analysis, where do you not put the money into the 401k because what the 401k, the options there aren't very good, but then you don't get that employer match. It's kind of this balancing act. So I'd love to get your thoughts on the 401k thing, what the problems are, and maybe some potential solutions.
Yeah. I think it's a huge problem. You're absolutely right. I mean, it's just another example to me of all of our economic institutions, all kind of surrounding the incumbent system, right? It's all designed to benefit the insiders. It's all designed to benefit the current infrastructure and the current systems that we have in place. And that's, these 401k providers, that's the traditional equity instruments that they're investing into, these mutual funds that oftentimes have higher fees than they should. It's a system that doesn't work for the current era, in my opinion, and yet it continues to be the incumbent system. And the people that benefit from it most are the ones that design the systems, right? And so they have no incentive to change it. I just think about it of like, if I were to tell my parents are kind of nearing retirement age, what should you be doing with your money? For them, I would never say, put 100% of it into, some kind of 60-40 fund, right? Like risk parity. It just doesn't make sense in the modern day and age of what we're facing. I look at things and I say, should you have an allocation to precious metals? Should you have an allocation to Bitcoin? Should you have an allocation to all these different things? Well, what is the way for people to do that? To your point, you have this employer match, which effectively is, kind of a golden handcuffs to the current system, right?
Yeah,
it's free,
right.
It's free money. And so how can you turn that down in order to opt out of the system for something else? It's very difficult. And so, I see these new companies that are coming out trying to kind of chip away at the current system. A friend of mine, Scott Melker, is kind of supporting this company called Choice IRA, which allows you to more self-design an allocation around an IRA. It allows you to include cryptocurrencies or Bitcoin. It allows you to do different things. And so I think there are going to be people that are trying to solve this system, but until you have large companies giving you the ability to opt out of these incumbent 401k systems and into something else that they will support that has more flexibility and has the ability to self-set allocations, it's going to be very hard to do it, just because of that golden handcuff that ties you to it.
Do you know why they're set up that way? Like why is it that an employer will only do an employer match if you just go into these 3 funds? Like why don't they give you that liberty?
I don't know. I don't know today. It'd be an interesting question for your audience, because I'm sure, with the size of the audience, someone should chime in the comments. I'm sure if I know the way our current systems work, I'm sure there's something nefarious if you go back far enough of someone who benefited from it and, what there were kickbacks or something. I hate to say that, but I'm sure there is.
Right.
Because you would think, just rational mindset. I think you will see more and more companies opting for something different. But, current companies, that's the status quo. It's okay. You can opt into this 100% equity. You can opt into this 60-40, equity bond split, or you can opt into whatever it might be. And they'll match you up to 3%. And so you take your free money and you're happy with it until you learn that maybe it's not the best thing in the world that you should be doing right now.
Yeah, exactly.
And you see
Well,
the numbers. I mean, it's striking. If you know, if you and you, I'm sure wealth advisors are looking at this too. If you do really poorly in the years leading up to retirement, you will be in a bad position. You know, as you try to live off that nest egg for the rest of your life. And with retirement age being what it is, but with life expectancy having extended, it's a
yeah,
challenging issue. I mean, this entitlement issue, you know, alongside all of it in the U.S. and the aging population demographics. I mean, my dad's a demographer by trade, and so I've grown up around that and seeing him talk about the issues facing Japan, you know, with its crazy aging population, and now that coming to the United States, it's a really scary issue and one that, frankly, I don't think enough people are talking about.
man, it's such a great point. And also on Japan, I'm thinking about their stock market peaks out in 90 and has gone just down, down, down. I'm not sure
Yeah.
where it is now, but let's say it's 50% lower in nominal terms.
Yeah.
It was back in 90. I think the European market peaked out in 2000 and
Yep.
hasn't got back to those levels in nominal terms. And so I'm just, I always kind of think that we've got so many people that have so much of their future purchasing power
Mm-hmm.
tied up in the stock market.
Yep.
What if the US follows their lead? I mean, we like to think that the United States is exceptional, but I don't know that we are in terms of the stock market.
Yeah.
And the Japanese central bank came in and tried to buy ETFs and tried to prop up their market. That didn't work. So,
Yeah.
I mean, what would happen if we get a 15-year run where in call it 2035, the stock market or the S&P is at a lower level in nominal terms than it is today?
Yeah, it's a really scary dynamic, and you know what you're hitting on is something I've looked at a lot because it's also with the backdrop of a risk-free rate of essentially zero or approaching zero
Yeah, right.
in those markets. In Japan, you know, it's kind of steadily declined to zero. It's been at or below on a real basis. And you know, I think a large part of that was a lot of the money flowed out of Japan and went and propped up the U.S. markets, right? I'm sure there's a similar dynamic in Europe where you had the globalization of the financial markets, and so money ran out of those economies and dove into the U.S. market, and so you have this continuously rising U.S. market over that same period. But it's an interesting dynamic. I don't know. I don't know what we expect we can see over the coming years. I do expect the continued deterioration of the dollar, and I don't know on a relative basis if that means the destruction of the dollar. You know, I see all the arguments and the dollar milkshake theory, my friend Brent, and all these other folks, and I continue to think, the dollar's reserve status is not in jeopardy today. I just there's too much of the economy that's still tied to. Too much of the global economy that's still tied to the U.S. dollar. I think I saw a stat that like 60+% of the world now is, kind of anchored around or uses the dollar versus something like, I don't know, 20-ish% back when Bretton Woods was signed. And so it's, it's a world economy that is still so anchored around the dollar that I don't see our reserve status changing. But when you look at the S&P 500 measured in gold, over the last 20, 30 years, it's a much more, striking picture than what you see if you look at it on dollar terms.